that the Cedi has exhibited significant and impressive performances this year despite the COVID-19 pandemic and the shock it is ravaging across the African countries' currencies. First of all, you realize that when you compare our export diversification relative to our peers, we appear to be a bit more diversified. Look at Nigeria, for instance, and you notice that about 90% of their FX earnings come from one particular commodity, that is crude oil alone. You go to Angola and it is the same story, about 90% comes from crude oil alone. You go to Zambia and it is about 70% from copper alone. But when you come to Ghana, our highest concentration is 40% in gold, and gracefully in these uncertain times, gold seems to be doing quite well, and so there's even an additional windfall that we get from gold receipts, and that is also helping to shore up the Cedi. But moving beyond that, there is a significant development on the market since the fourth quarter of last year that has also helped the Cedi perform very well this year. It is largely due to the bi-weekly FX forward auctions that the central bank has been conducting, because what that has done is it is setting a forward pricing of the exchange rate. Because once the dollars are sold forward, they are done at a certain price, and these forward prices become the benchmark for forward trading on the foreign exchange market, and that takes out a lot of the panic buys when there is a little bit of shocks. And because that panic buy situation is largely cut out now, the Cedi is enjoying steady or stability because traders, buyers and sellers tend to have a benchmark to forward price and lock in without rushing for the actual cash today when they do not need it now. So that has been very helpful in determining the stability that we're seeing on the Cedi. But not to also discount the fact that foreign investors have also realized that before the COVID-19 struck, we had issued a $3 billion Eurobond, and in the midst of the pandemic, we also got $1 billion from the IMF. All these have helped to cushion our short-term need for FX. And so the market has realized that in the short term, our external debt obligations have been catered for already, at least for the short term. And so that is also being priced into the currency and is helping the Cedi maintain stability. And hopefully, until the end of the year, even when COCOBOD comes through with additional $1.3 billion from the syndicated facility, the Cedi should generally be stable despite the persistent risk of political noise around the election period.
Hi guys, I hope you enjoyed this video. Subscribe to our Citi TV YouTube channel for more videos on the business dashboard.
Tune in and stay updated on the key business news stories of the day with Business Dashboard every weekday at 7 p.m. only on Citi TV.